Good day, fellow investors. Yes, the fundamentals for gold to go to 5,000 in the next few years are extremely strong. And in the latest comments, there were a lot of questions about the current gold rally and whether gold is going to tank as Buffett might be predicting for the stock market crash. I have been on YouTube for almost a decade now, and I have actually started on YouTube with top 10 gold miners analyzed back in 2017. Wouldn't go and watch that video now. But back then, gold was close to a value investment on the low prices and close to production costs pricings. Now things are different, but I think there is still plenty of room to run, and we have to discuss the gold environment, the gold investing strategy, the gold price fundamentals, so that you can see how gold might, yes or not, fit your portfolio and whether there is something better, as always. Let's immediately start with the current gold price fundamentals to see what is the risk and reward going forward. If we look at the current gold price, yes, it has spiked up almost double over the last 5 years, but also up almost 40% over the last 12 months. However, if I look at the fundamentals, with interest rates now being at 5% expected to go lower because those must go lower, the government cannot finance its debt at current interest rates, the burden is too difficult. Therefore, with interest rates going down, financial asset prices, including gold, should go up. So that's one trigger that led to this, let's say, gold rally. Now, look at the Fed's balance sheet. It was below 1 trillion. Now it has stabilized. It is expected to stabilize, let's say, at 7 trillion. So that's almost a 10x from the Fed's balance sheet. Price of gold over the last 20-something years, well, 10x, no? But also, look at this. Now this was stable, then we had issues, then issues, then issues, and what happened to the balance sheet? It went up 10x. Do you believe that this will stay stable? What will happen to the next issues that we will have? Recession, whatever. The balance sheet will again grow. Therefore, again, a strong fundamental for more gold to grow. Plus, if we look at the current interest rate and inflation environment, if you invest in a 10-year treasury, your return is in reality zero, the real return. Yes, inflation, but that's nothing more than inflation protection, and then also at some level, because you don't know where will things go forward. And therefore, if you look at another key fundamental, the government debt, they are spending 2 billion more that they are receiving, the sources of finances for the government. Half of that is just to finance interest, again, to finance, to refinance, to ease the burden of this debt. The only solution is to let inflation loose, and we are still above 3%. The trend, yes, a little bit, but I think inflation and these peaks in inflation will be there because there is simply no other way for governments and everything, the world, to ease this debt burden. So I would not be surprised to see gold at 5,000 in the next 5-6 years. So you would say that is something to invest in. Well, that depends on your strategy, because there is a lot of sentiment concerning gold prices. We have had 20 years of ugly gold prices, then a boom, then a decade of ugliness, and now we have had 2 booms after a few years of stagnation. So if you look at the long-term gold price outlook, the fundamentals for gold are great, as the fundamentals for currency and everything are terrible, but keep in mind gold is driven by sentiment. And when it comes to investing in gold, it's a personal thing. You need to understand the risk and reward, you need to think of the time frame of your result, and if you're a value investor, you want a margin of safety. And you'll see what means think both. Let's start with having gold in your portfolio. One of the strategies also that I started this YouTube channel with was to have an all-weather portfolio, and gold has certainly a position in a portfolio. What does that mean? Let's say you fix your portfolio at 7.5% in gold. When gold goes up 40%, then your 7.5 likely become 9, 10%. What do? You sell a little bit and you bring it back to 7.5%. You made some profit. Then you have an asset allocation into stocks. What happens when those stocks go up? The stock allocation goes up. If gold is flat, then your 7.5% become 5% in your portfolio. Then you increase it to 7.5% again and lower the stocks. When the stocks go down, then gold goes up, then you again get to 10% of gold, you sell a little bit, and then you always make a profit on that price volatility, which means then you have gold in a portfolio, and I call it that gold with a yield. And that is something that can be applied if you wish to have gold in your portfolio. But there is also something to understand when there is gold in a portfolio. I prefer the gold with a yield strategy because it can take 1, 2, 3 years of nothingness. And we have also seen 25 years of nothingness with gold in a portfolio. And then if you trade on these ups and downs, you can at least have some yield and some margin of safety, which is something. But then when it comes to value investing, it is about think both. You can then go into gold miners that some say are extremely undervalued because gold prices went up, and as we have seen here, miner prices are not going anywhere. We might discuss that in a video if you let me know in the comments below. So that's one way. But we have the yield, we have the strong fundamentals for gold, but can we have better investments? Yes, gold will follow inflation over time, 4-5%, which is okay, but might not do anything for 7 years. There is no dividend for sure. Maybe if you trade a little bit something. Asset allocation strategy gives some yield, but I think that owning businesses does better over time. And the question you have to ask when you look at gold, do I have better risk and reward? Because gold might go to 5K by 2030, which is then 15%, or by 2037, which is then just 5%, and there you have businesses that give you 5% yields, and can crash back to 1500 on something, or Goldilocks continuing, or the economy. In my research platform, I have much better investments than gold. So I'm saying gold is good, see how it fits you, but there is much, much, much better, where you can have protection from an anti-correlated asset, growth from owning a business that also gives you protection from inflation. And therefore, gold now is not a value investment, it's a good investment, but risk and reward are at parity. It's not asymmetric bargain with low risk, high reward. For that, value investments are the key, and I think there is better than gold now.